oil sector rallying this week after President Trump announced sanctions on Russia's largest oil producers, Rosneft and Lukoil. Joining us right now to talk about it is Amrita Sen. She is Energy Aspects founder and director of research. And Amrita, what a week it's been, going from 58, maybe just below $58 a barrel, all the way to 62.37 this morning. Is this more than just those sanctions? What else is happening here to push these prices higher?
Look, these are the most meaningful sanctions the U.S. has announced on Russia since the war began. So that's why we've seen the jump. But I'll say this, that we are talking about volumes potentially being lost anywhere between 1.5 million barrels per day to 2.5 million barrels per day. And if that were to actually happen, the price jump would be significantly more. It's just not going to be $5, $6, right? It just shows you that the market is actually still quite skeptical of whether this is going to go through or not. We've talked about and we've heard about sanctions for years. They've not been enforced in the same way. But we do think this is meaningful. It's just a question of whether the U.S. is going to enforce it. And that's why, yes, we've seen a jump, but the jump doesn't actually reflect what theoretically could be lost in the market.
How much would it be if we really enforced it? What did you say, Amrita?
1.5 to 2.5 million barrels a day.
What would the price be?
1.5 to 2.5 million barrels per day.
Where would the price be instead of
we'd be significantly higher. I think we're talking about 80s, 90s. I mean, it just depends on the range of how much we actually lose. And that's why I want to say that, look, we haven't made changes to our balances either, because we do think workarounds will be found. They usually are. But it does mean for the next couple of months, you are going to see some real tightness, particularly in Asia. Then once workarounds are found, you will see this oil flow. But that's where the enforcement becomes very, very important, whether we're going to get that or not.
Workarounds where the administration turns a blind eye, or workarounds that no matter how hard we try, we can't cut off the flow?
The former, because there's always ways, right? Yes, there'll be new entities that show up in places in the Middle East, and then they start trading these volumes. But if you look at what has happened to the Iranian flows back when these sanctions were announced, India stopped buying Iranian oil entirely. If there are proper sanctions and they're enforced, India will absolutely stop buying Russian oil. Yes, there will still be oil flowing to China, but it would still reduce Russian oil exports by at least 1 million barrels per day. And that would still mean a higher price, even if it doesn't go all the way to the $80, right?
Why do you think we've seen these sanctions at this point? I mean, part of it is probably because oil prices were so low it allowed the Trump administration to say, hey, we're going to get pretty serious about this. But they have been talking tough on India, at least, with the use of this oil for quite some time.
Yes, but I think this is a fundamental difference, and I'm glad you asked the question, because so far the tough talk has actually been on tariffs. And we've been saying this for a long time, that if you are serious about actually making a meaningful difference to Russian flows, it's sanctions that matter. If you think about it from a refiner's point of view, why would you change your behavior if some other sector in your country is being affected by your 50% tariffs, right? It doesn't work. Sanctions are meaningful, especially if they're US sanctions. The banks get cautious, insurance companies get cautious, and you're simply not going to get the funding or even allowed to deal with it. And remember, a lot of these companies, both in China and in India, have big US presence. They do a lot of business in the U.S., so they have no incentive to circumvent sanctions. I think that's why sanctions is a far, far more important or impactful tool than tariffs are.
There has been some question about whether the Europeans would go along with this and support this as well. Germany, in particular, is not real excited about the idea of their manufacturing base getting hit with higher energy prices. Does it matter if they support us, if America is really the key on this? And do you think we'll get their support eventually?
Well, the EU did come out with the 19th package. It was very much a coordinated effect. The UK went first, and we already started to see some of the disruptions just from the UK sanctions alone. Then the US announced it, and the EU announced it very much like within a day. So yes, they have gone together, despite what it would mean for Western energy prices. I mean, look, that's why the West has been tiptoeing around this issue for the last few years because it knows the cost is going to be higher energy prices. And that's why I think the market is skeptical. At the end of the day, President Trump wants low oil prices. The West is actually, it doesn't have the stomach to take high energy prices. And that's why the market doesn't believe it. If the market believed it, we would be much higher.
So all of that being said, where do you expect energy prices to go from here?
So I would say, look, in the next couple of days, we'll probably grind higher. I wouldn't rule out Brent kind of trading $70 again. However, I think there's so much skepticism in the market. I just got back from the US, and every trader I've been speaking with, they're fading this. They don't think the rally is going to last because we are still talking about an oversupplied market in 2026. I think this is going to be something we need to monitor for a while. If these sanctions persist, or rather they're really enforced after the 21st of November deadline, then into 2026, that's when we're going to see the material increase in prices. But after the near-term increase, we're probably going to sell off again.